What if 2025 could be the year you finally take control of your finances? Imagine looking back and realizing that one decision completely changed the way you handle money. Now here's the big question. Are you ready to make those smart moves today that your future self will thank you for? This isn't just about saving a few bucks, it's about building a life of freedom, stability, and opportunity. Stick around, this might just be the most important conversation about your money you'll have all year. Number 1. Budgeting and saving. Money management can feel overwhelming, but it doesn't have to be. Think of budgeting as your personal roadmap. It's not about restriction, it's about direction. A good budget tells your money where to go instead of wondering where it went. The 50-30-20 rule is a lifesaver here. Allocate 50% of your income to essentials like rent, groceries, and bills. Use 30% for things you enjoy because, let's face it, life's too short not to treat yourself sometimes. The remaining 20%? That's your future fund savings and investments. But here's where most people trip up: discipline. That's why automation is such a game changer. Set up your bank account to automatically transfer a portion of your paycheck into your savings the moment it lands. Think of it as paying yourself first. You won't even miss the money because you never see it in your spending account. Then there's the emergency fund. This is your safety net for life's unexpected curveballs. A flat tire, a surprise medical bill, or even an unforeseen job loss. Aim for at least 3 months of living expenses to start, and build it up to 6 months over time. It might take a while, but every dollar saved is a dollar closer to peace of mind. One last tip: use tools and apps to simplify your budgeting. Platforms like Mint or YNAB, you need a budget, track your spending and give you a clear picture of where your money goes. Awareness is half the battle. Once you see the patterns, you can tweak and adjust without feeling deprived. Budgeting isn't about saying no, it's about saying yes to the things that matter most. Number 2. Debt management. Debt can feel like quicksand, pulling you down every time you try to climb out. But here's the good news: there's a way out. The first step is understanding your debt, every single detail. What's the interest rate? How much do you owe? What's the minimum payment? Once you know the numbers, you can make a plan. Start with the high-interest debts: credit cards, payday loans, or anything with double-digit interest rates. These are the ones eating away at your income the fastest. Tackling them first is like plugging the biggest leaks in a sinking boat. Use the avalanche method if you want to focus on interest savings. Pay off the highest interest debt first while maintaining minimum payments on the rest. Prefer psychological wins. The snowball method has you start with the smallest balance, giving you quick victories to build momentum. Now, what about consolidation? If you're juggling multiple debts, consider rolling them into one. A personal loan or balance transfer credit card can lower your interest rates, making payments more manageable. Just be careful, this isn't a free pass to rack up more debt. The goal is to simplify and reduce, not shift the problem. And don't underestimate the power of negotiation. Call your lenders and ask for a lower interest rate. It sounds scary, but you'd be surprised how often they agree, especially if you have a history of on-time payments. Debt is temporary if you approach it strategically. Track your progress, celebrate milestones, and keep your eyes on the bigger goal: freedom. Each payment is a step closer to unburdening yourself from financial stress. Number 3. Investment strategies. Let's talk about turning your money into more money. Investments aren't just for people with thousands of dollars lying around. They're for anyone who wants their money to work for them, even while they sleep. In 2025, the name of the game is diversification. Don't put all your eggs in one basket. That's investing 101. Stocks, bonds, mutual funds, real estate, and even digital currencies can all play a role in your portfolio. Start with what you know. If you're new to investing, look at index funds. These are low-cost, diversified options that track the market's overall performance. They're like the beginner's kit for investing: simple, steady, and reliable. Cryptocurrency is another hot topic, but let's not sugarcoat it. It's volatile. That doesn't mean you should ignore it entirely, but it does mean you need to be cautious. Think of crypto as a high-risk, high-reward play. Only invest what you can afford to lose and always do your homework. Then there's sustainable investing, or ESG. This is for the investor who wants their money to reflect their values. Companies that prioritize environmental, social, and governance factors are increasingly seen as the future. Plus, they often outperform the market. Imagine growing your wealth while supporting clean energy, fair labor practices, and ethical business models. It's a win-win. Lastly, keep your eyes on emerging sectors. Artificial intelligence, renewable energy, and biotech are shaping up to be the industries of tomorrow. Staying informed isn't just smart, it's necessary. The financial world is always changing, and the best investors are the ones who adapt. Start small, stay consistent, and remember, investing is a marathon, not a sprint. Number 4, retirement planning. Think about this, your future self, years from now, enjoying a comfortable life because of decisions you made today. That's the magic of retirement planning. It's not just about saving money, it's about giving yourself freedom. Freedom to travel, to relax, to spend time with family, or even to start a passion project you've always dreamed of. Retirement planning begins with maximizing your contributions to accounts like 401ks or IRAs. If your employer offers a 401k with a match, you're essentially leaving free money on the table if you're not contributing enough to get the full match. Let's say your employer matches 50% of contributions up to 6% of your salary. That's an instant 50% return on your investment. Where else can you get that kind of guarantee? For those who are self-employed or don't have access to employer-sponsored plans, options like SEP IRAs or solo 401ks can fill the gap. These accounts have higher contribution limits than traditional IRAs, which means you can save more and take advantage of tax benefits. And don't underestimate the power of compound interest. It's like planting a tree that grows larger every year, eventually bearing more fruit than you ever imagined. But here's where it gets tricky. Retirement isn't one size fits all. Do you want to retire early, travel the world, leave a legacy for your kids or grandkids? Your goals will shape how much you need to save and where you should invest. Use online retirement calculators to estimate how much you'll need based on your lifestyle. Then work backward to figure out how much to save each month. Remember, the earlier you start, the less you have to save each year. Starting late? Don't worry, it's never too late to make a difference. Just increase your contributions and cut back on unnecessary expenses. The point is to take action now so that your future self can live without financial stress. Number 5, financial literacy and wellness. Here's a truth that might surprise you. Financial literacy is like a secret superpower. The more you know about money, the more control you have over your life. Think about it. How many times have you heard someone say, "I wish I learned this in school"? Personal finance isn't rocket science, but it does require effort and curiosity. Start by diving into resources that break down complex topics into simple, actionable advice. Books like The Simple Path to Wealth or podcasts like The Dave Ramsey Show are excellent starting points. The key is to make learning a habit. Spend just 15 minutes a day reading an article, watching a video, or listening to a podcast. Over time, those little lessons add up to a big difference. Technology is your ally here. Apps like Mint can help you track your spending, while platforms like Robinhood or Vanguard simplify investing for beginners. There's no shortage of tools designed to make managing your money easier. The trick is finding the ones that work best for you and sticking with them. Financial wellness is about more than just numbers. It's about how those numbers affect your life. Are you losing sleep over bills? Do you avoid opening your bank statements because it's too stressful? Addressing these feelings is as important as balancing your budget. Financial stress can take a toll on your mental and physical health, leading to anxiety, depression, and even illness. But when you take control of your money, you take control of your peace of mind. Finally, share your journey. Talk about money with trusted friends or family. Join online communities where people share tips and encouragement. The more open you are, the more you'll learn and the more empowered you'll feel. Financial literacy isn't just about dollars and cents, it's about building a life that feels secure, fulfilling, and free. Now here's your next step. Take action. Start small, but start today. Share this video with someone who needs a little financial inspiration, leave a comment about your favorite tip, and subscribe to the channel for more practical advice. Don't forget to hit the bell icon so you never miss an update. Let's make 2025 the year you turn your financial goals into reality. You've got this.